this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now, go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Alright everybody, I'm going to show you on a Euro USD chart. And in this video, I'm just going to keep this short, but I just got off a tech support call with a customer who sold the Euro US dollar, and I looked at the charts and I'm going, why did you sell right here? So here's what I did. As I went over these charts, I want to show you why I helped him get that aha moment when the light bulb clicked on and he saw, maybe for the first time, that how to really trade the market. So folks, listen, this video is very important. This video is going to show you how I trade. Okay, now let's do this. We're going to start with a Euro USD. Well, first of all, let's go back to the chart here. I want to show you what this customer did. And I'm not knocking on this customer. He actually has a piece of software that he paid a lot of money for that shows him signals where to buy and sell, and it gave him some terrible information. So I told him, kill the software. This is where you need to focus. So we're going to open up, first of all, a Euro USD daily chart. And as you can see the picture here, let's start deleting some. Actually, I need these lines in here because I'm using those later, but let me chop a couple of these lines out. Okay, we're going to kill that one. We're going to kill this one. We're going to kill this one. Okay, now I'm going to show you what we're doing. Now this is the Euro USD chart. I'm going to zoom down a little bit so you can see this a little further. Actually, you know what? I think that works perfectly fine. You can see, and I talk about this all the time, and here's rule number one, folks, other than your equity management. In fact, I'll put a link in YouTube right here in the bottom right-hand corner. I have a video series called How to Trade Forex in 3 Easy Steps. I highly suggest you watch those. They're very short videos, few minutes long, like 10 minutes apiece, and talk about the 3 steps. Step number one, proper equity management. Step number 2, proper entry, optimal entry and exit points, including stop losses and profit targets. And then step number 3 is how do you manage your trade once you're in. So let's talk about this in this video. And one of those, the rules that I talk about is a currency pair trades in a range 80% of the time. Okay, so what does that mean by the range? That it is in a sideways, an up range, or a down range. Now here's what we're talking about. You can see that right here. You see this green line in the middle? You see how the price is really fluctuated? And let's put a bottom on this. Price is really fluctuated. This is what's called a channel. It broke out of the channel, right? Came down, stayed in channel, broke down a little bit, and went back up to a different channel. There's multiple channels within this channel, but for the most part, this area in here has been a serious bottom point, the 3100 mark, a serious support and resistance level. And then we have one right around this range. It's been more recent. Okay, been more recent around here. In the last few days, it's been trading in this range right here. So this customer, let's go back. He sent me this trade and asked me what I thought about this. And this is the Euro USD 60-minute chart. Okay. Oh, I'm going the wrong way. Actually, I need my 4-hour chart here, so let's do this. Actually, yeah, I need to pull up my 4-hour chart. So let me open up a 4-hour chart. I'm trying to remember which chart I had open for him. As you can see, no script here. Everything's done on the fly, people. All right, let's open up a 4-hour chart. Okay, here's my 4-hour chart. Okay, let's zoom this in so I can see this as a little bit bigger picture. Okay, so the customer said he put a he sold at 31.36. Okay, so he sold right here. He put 150 pip stop loss, so the stop loss would have been, no, he bought right there. Put 150 pip stop loss and a 50 pip profit target. So here's the thing. One thing is wrong with this is the risk to reward ratio. 150 pip stop loss, but only 50 pip profit target. Now, I like to see the other way around. If you're going to have a 50 pip stop loss, I highly suggest you have if you're going to have a 50 pip stop loss, you should have a 150 pip potential gain. 1 to 2 is the ratio I like to use. Now, when you're trading in a range, 1 to 1 is fine. I've traded 1 to 1. I suggest 1 to 2 is even better opportunities for you. But he bought here, was hoping price would go up, and he put a huge stop loss down here. Now, he's most likely not going to be stopped out on this trade, okay? Because I'm expecting this pair to go back up. It's going to come down into the bottom of this range. But here's how to trade. He did the wrong way. When he bought at 31.36, I would have sold, and this is what I told him. I said I would have sold at 31.36. In fact, I would have sold at 31.35. Now let's do some drawing here, and this is exactly what I showed him. You can see here, this is a 40-minute chart. I mean, a 4-hour chart. Every one of these candles represents 4 hours. Okay? So you can see here that price, if about a week ago, broke down into this range, and it's been cycling into this range. And here's what we're getting. We're getting higher highs, first of all. Start right here. The highs are getting higher, right? And the lows are getting slightly higher. Okay? So we have a sideways channel range, but the highs are getting higher and the lows are starting to get higher, which means this pair is more bullish. So we're looking for more of a buy opportunity. Now you can sell here. You can sell, buy, and you can make tons of trades over, like in one day today. We could have sold this pair and bought this pair 4 times. I can see four great trades. We would have made at 2% leverage, 2%. I would have made 8% off that trade. I didn't even look at the 4-hour chart today. I was so focused on helping some other customers today. I missed these trades. But I would have sold here. I would have set a profit target down in here, usually a good 15-20 pips above the bottom of the range. But just draw the line. Look at it. Solid, simple support and resistance. You can see that it's been trading this range. So what do? You buy at the bottom of the range, you sell at the top of the range. Okay? You need to look at the long-term trend. Now the trend has been down on this pair. It's moving slightly up, so I could see this pair moving up, especially up to the 3,300 mark. Okay? But what we're going to do here, and I'm sending out this signal to everybody, is I would buy right here at 30.60, okay, and put my profit target around 31.80. Okay, I'll tell you why. You see solid support and resistance level at this 31.80 mark. Now watch, we're on a 4-hour chart. You need a confluence of events when you make a trade. You don't just trade off one chart. You can. But now if you go to the daily chart, that's my 60-minute, and we don't need that. I need my daily chart right here. When you look at the daily chart, you can see that price is easily going to come up really close to this 3,200 mark. There's a 31.80. Remember, there were some solid support and resistance. You see how it looks right through here? Price has a hard time getting through there. It's consolidated, rejected, blew through there, but ultimately I'm expecting this price to come all the way down to the 1.3060 mark and at least come up there. Now it could come up to this all the way up here, but what if it comes partially way up and then it comes back down? It happens all the time. Okay, so you want to take your profits a little early, 31.80. Now we're going to put a stop loss. Not going to put a stop loss based on the 4-hour chart. It's easier to put it's more stable to put a stop loss off of the daily charts. Now, you want to look at a stop loss below the most recent swing lows. That could be considered. This is even safer. This spike is even safer. Okay, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would have to break through the levels, the more price would to stop you out, the safer that trade is going to be for you, especially if you're trading in a range and you're trading in the right direction. Now you can see the range. Now you see this range on the daily chart. See how this looks? This is a great buy right down in here. Okay, and I'm expecting price went up. It's going to come back down within the next few days. It could be tomorrow. In fact, most likely tomorrow. We're talking about less than 40 pips away, and price is working its way down. You see how this candle is dropping? The bears are winning. Price has been rejecting. Price is going to come down to this point. Okay, we're going to get in this trade. We're going to put a stop loss down here. I'm going to say right around 29.57. We want to make sure you don't want to keep it on the line because it can touch the line. You want to make sure you give yourself some breathing room. So 29.57. That's our stop. So what are we doing with this trade? We're going to buy at 1.3060. Put a stop loss at 0.2957. That's 100 pips. Because we're running off the daily chart. And our profit target is 3180, 1.3180. So here's the deal. 100 pip stop loss, 120 pip gain. Now, the ratio is not 1 to 2, but it's better than 1 to 1. And because this currency pair has been trading in this range so strongly, and price is rejected off of that 1.3060 line so strong, the probability of that breaking through and breaking through here and breaking through here is very slim. So folks, that's how you pick trades. You've got to wait. You don't just jump in and jump in a trade and say, hey, it looks like the euro's going north, I'm jumping in. That's called chasing a trade. All right? And then what's going to happen there is ultimately you're going to get into a bad trade. You're going to a lot of times you actually get into a trade when you buy a trade when you should have sold the trade. So anyway, that's my 2 cents. I hope this video helps you. If you have any questions, let us know. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.